Guys, July 26th after the close. Let's just touch on some of the currency markets that we didn't really get to cover today. It's more of the same in the dollar, but what I kind of wanted to highlight from Tokyo's session last night is the yen starting to kind of reverse trends here again. It's the same. It's back in line with where the trend's been for the better part of 6 to 9 months. So I think that's worth noting. I mean, here, dollar index, not a whole lot's changed there. It's still strong. I mean, this on the weekly level is just powerful. I mean, we held 92 right where we were supposed to. So we got to start to think that we're going to base at least move back towards these old highs, and then maybe even we have a further bigger picture leg to new highs on the monthly level, even the yearly level. But that's not really what I wanted to highlight. If we look at pound versus the yen, this is the long-term downtrend that's been going on. Let's look at the daily. So we can see this clear downtrend. Now I drew in here the 30-day. And within the context of a downtrend, you tend to get lower highs at or near a descending 30-day moving average. All right, you can see it here, here. It's not always the case. Just like anything in trading is never, there's no absolute. So it's all relative, but you're going to tend to get pivot lower highs within the downtrend at or near the 30-period moving average. That's just what we used in treasuries. We found that worked the best over 10 years of looking at charts, and I use it the same in the FX markets. So what I was talking about last week is this was a move that was pretty oversold. It was oversold for a lot of reasons, but you could see the cycle lows were down here also. We bounced around off the bottom twice, and so we needed to cycle out up here and give it some time to retrace and rest. But you could see the idea was that we don't need to know what's going to happen next. We just want to trade what is. And as price was bouncing back towards this moving average, it was either most likely or a higher probability that we're going to fail here and then resume the downtrend, or we're going to stretch everyone that was shorted here, or the bad shorts in the market from lower. We're going to squeeze them back up into the upper bands up here around 150. So as of last week, we were just kind of sliding quietly sideways into the average as the average came down, and now last night 138 was kind of the pivot. You can see that that's the daily lows. If we flip over to the hourly, let's just go to the 4-hour. Again, this is within the context of a nice downtrend. These were your lower highs, your swing lower highs, or I call it TMS in my model. And once we kind of broke above this 139 level, there was a chance that we could move back toward the 200 on the 4-hour. I call that the 200 rule. When you break the pattern of lower highs, you'll tend to get a deeper retracement or a larger pullback back towards this 200. So that's almost what happened. Was we got to move back close to there, failed, and the intermediate term trigger then was not only do we first have to stop making higher highs, so this was a higher high relative to this high, and this was a higher high relative to this high, but then as the market started to kind of lose its steam up here, it's a sign that the bulls couldn't take the market much higher when it makes lower highs like this. The next trigger you want to see to confirm another downtrend lower is you got to take out the lower lows. So this was your you got to take out the higher lows, right? So this is a higher low relative to here. This is your next higher low relative to here. Another higher low, or you can argue it's an equidistant low. It's the same distance as this low here, right? And then you even briefly tested the support level again at 138 and bounced. So last week, that's what I was identifying is, hey, you got these higher lows all around this 138 area, and as soon as you crack it, that's going to start to roll this trend back negative or bearish. And you can kind of see that. See here, you have the wave structure is very bearish, and now the wave structure flips. It gives you a nice visual, right? And then now you can see that starting to roll over again. So from here, I'll be a little bit more aggressive on the short side. I even hit some down last night. We were talking right in here, even though we were oversold, or not, I hate saying oversold, and this is a cyclical indicator. It's an oscillator, but the price was oversold based on where it came from. If you want to use an RSI, that would have been flashing low. The cycle was low, so I don't normally like to hit them down and chase them when the cycle's low. But the fact that we just broke to new lower lows, I wanted to increase my size, so we sold a little bit more, and then I got a chance to cover in here. And once the candles went green, you could cover a little bit back. And then we're starting to put a few more back out here, back towards the 30 on the hourly. So again, I'm looking for a low or high at or near this 30. I don't know if you could see it. It's the blue line there. I should probably make that a different color, but guys, that's the point. You see how this wave structure is starting to roll over? You see how the 200 is starting to roll over? Now we just need this pi cycle to come with it, which would be indicative of the 4-hour moving more bearish. Alright, get this 30 to come around. So that's kind of what I see going on. I think there's a good chance we're going to test lower levels here. So that's how I'm playing it, and that's kind of what's new as far as the yen goes. You can see it dollar yen also. Right? This is a very lengthy downtrend. It's been one of the best places to be short all year. I mean, the yen's been very strong. And this double bottom is pretty powerful at par or 100. So, you know, let's just be aware of that. As long as you're aware of it, that's half the battle in trading. I mean, this is possible that this could be a longer term high or low, yeah. Especially if we look at the monthly level. I was talking in the room today. You wouldn't think that the Nikkei or the dollar yen is bullish long term, but essentially this wave formation has been bullish since the middle part of 2012. So this is why the market's putting in these tails, is it's trying to hold the longer term trend. It's going to be a battle here. This is going to be huge. This 100 area. When you make a move up like this in an uptrend, and then you come back down and you test the lower bands, and you put in a couple tails, that was it. This is the chance for the bulls or this uptrend to continue. If it can't hold this 100 level, then you got to think that we're gonna get a move back to the lows from 2012, 2011. You know, that's yet to be seen, but that's the point. All right, so 100's major for the long term, and you can see why it was such. We've had really three powerful moves off that same area, and it's also down here near pi on the weekly level. So it's no wonder that's a big area. But it just matters how you want to play it. So I'm playing this within the context of this downtrend. So we covered well, and now I want to put some more back out. I want to sell this rally back in here towards the upper parts of this band. So I sold some here. I think I missed selling up in here. I was already short pound yen. I just wanted to be conservative. So I got a little bit back here today. And my average is alright, but let's just see if we can get this back to 102 or so. But I'm going to move now down to the intermediate term level and trade it around. So any move back up in here, you can see the bands rolled over, right? This is a great visual. Bearish, flips bullish, bullish wave formation for the last several weeks, right? moves sideways. You can see the bands get tight here. That's indicative of a range trade, sideways range trade. And then again, back to the TMS, technical market structure, higher low, higher low, higher low, higher lows, higher lows. Trying to crack these higher lows here. Kind of holding on to it, 105.5. Up, held it, started to move back up, made a lower high relative to here. So that's the first sign that maybe the bulls are tired. And then when we cracked 105.5, that was last night, or Sunday night even maybe. No, last night. Now you can see this band structure. Look how that's a nice new wave that's forming. So you want to be a seller. Same thing's happening on CAD yen, but CAD yen, the chart, the price action is still down here. This is a little bit closer to the descending 30, so I'm going to probably sell some more here as soon as I'm done with this video. But then just be prepared. I mean, I don't want to get aggressive here. You want to be able to sell more up in this area and try to work a nice average. I mean, my average is up here around 105.20, but I'd be prepared to work a scale all the way back to 105.80, 106. And don't forget 105.5 was big. That was the level from back here that the market kept scraping the bottom on. Rallied, that was support, broke. Now it's going to be resistance back on the upside. So anyhow, I think that kind of paints the picture. The Nikkei was breaking down today also. So I think the yen's kind of trying to do what it's been doing all year. And the dollar still looks strong. So that's how I'm going to play those two pairs, dollar yen, pound yen, and specifically I think that's what you can look for in the yen going forward. So I'll hit you guys up in the morning with another video. Again, JenkinsRM.com is the site. I'm going to be doing an options training session. I'm having my partner and my marketing guys send that out tonight or tomorrow. But that first week in August, and then probably the last Saturday in August, I'm going to be holding 2 option seminars all day Saturday. I usually do 9 to 4, take an hour lunch, and I'm going to go over some of the basics for those that are interested in just learning options, and then towards the end, I get into some more advanced strategies that I use. Call ratio back spreads, put ratio back spreads, and these are all the types of plays that I use. They're great for the longer term investing because it allows me to control a lot of stock for really a fraction of the amount of capital or buying power you have to put up. And then it also allows you to, there's an art to how you get in and get out of, when you really want to build a position. And so I kind of go over the ways that you can leg out and leg into longer term plays or even an intermediate term swing plays. And then we also go over some of the option strategies around like trading the VIX, which a lot of people don't know how lucrative that can be playing the short side and some of the vol leverage ETFs. So I go over that in that session also. So anyways, visit the site to learn more info about that, and you guys just keep a heads up for an email I'll send out tonight or tomorrow. Alright, have a good evening. Talk to you in the morning.